The Bitcoin halving, which occurs approximately every 4 years, is a pivotal event in the cryptocurrency world, significantly affecting Bitcoin's supply and price dynamics. The halving refers to the reduction in the reward miners receive for verifying Bitcoin transactions, effectively halving the number of new Bitcoins generated with each block mined. This event impacts both the Bitcoin network and its investors, as it reduces the rate at which new Bitcoins are introduced into circulation, creating a built-in scarcity that can influence the asset's price. In 2024, the next Bitcoin halving is expected to occur in April or May, and it will reduce the block reward from 6.25 BTC to 3.125 BTC. This is important because, with fewer new Bitcoins being mined, the supply of the cryptocurrency becomes more limited, which historically has been a catalyst for price increases as demand remains steady or grows. The previous halvings in 2012, 2016, and 2020 have seen Bitcoin's price experience significant surges in the months and years following the event, with long-term uptrends attributed to the reduced supply. What the 2024 halving means for investors. 1. Potential price appreciation. Historically, Bitcoin has experienced upward price momentum after halvings. As the reward for mining is halved, the scarcity of Bitcoin increases, which, in theory, can push prices higher if demand remains strong. Investors may anticipate a rise in Bitcoin's value due to this reduced supply, making it an attractive time to invest in anticipation of potential gains. Number 2. Increased market attention. The halving event typically draws significant attention from both retail and institutional investors. Increased media coverage and discussions in the crypto community often result in more people learning about Bitcoin and entering the market, leading to heightened demand and potentially higher prices. Number 3. Mining difficulty and market impact. With a reduced block reward, some miners with less efficient operations might find it unprofitable to continue mining, particularly if Bitcoin's price doesn't rise enough to offset the halved rewards. This could lead to a temporary decrease in the overall hash rate, the total computational power used to mine Bitcoin. But historically, the network has adjusted the difficulty level to maintain the stability of the blockchain. This shift could affect market sentiment, especially if it causes volatility in mining operations. 4. Long-term investment opportunities. While Bitcoin's price may experience short-term fluctuations following the halving, the long-term trend has generally been positive. Investors who are focused on the long-term potential of Bitcoin may view the halving as an opportunity to accumulate more BTC at a relatively lower price before the supply reduction takes full effect. However, the increased attention can also result in a speculative buy the rumor, sell the news scenario, where the price rises leading up to the event but may experience volatility immediately afterward. Number 5. Institutional adoption and ETF interest. The 2024 halving occurs in a period of growing institutional interest in Bitcoin. With Bitcoin ETFs gaining traction and more companies holding Bitcoin on their balance sheets, the halving could further drive institutional demand for the asset. This could increase liquidity in the market, making Bitcoin more accessible to traditional investors and potentially stabilizing its price movements in the long run. 6. Regulatory and economic factors. The halving's effects can be amplified or mitigated by external factors, such as changes in cryptocurrency regulations, economic conditions, and investor sentiment. For instance, regulatory clarity around Bitcoin in major markets or a favorable macroeconomic environment, such as rising inflation or a weakening dollar, could make Bitcoin an even more attractive investment. Conversely, regulatory crackdowns or a tightening global economy could dampen investor enthusiasm. Conclusion: for investors, the 2024 Bitcoin halving represents a significant event that could influence the price, supply, and overall dynamics of the Bitcoin market. While historical trends suggest the possibility of price appreciation in the years following a halving, it's important to keep in mind that past performance is not necessarily indicative of future results. As with any investment, careful consideration of market conditions, risk tolerance, and long-term goals is essential. The halving could provide a unique opportunity for those looking to invest in Bitcoin, but it also comes with volatility. and investors should be prepared for short term price fluctuations as the market responds to the supply changes.